Earlier this week, you had both the SpaceX Starship explode as well as the Tesla first quarter earnings that were disappointing for investors, resulting in Elon Musk reportedly losing more than $12 billion in a single day. Nevertheless, Tesla stock is still one of the best performers so far in 2023. At one point, it was up close to 70%. Now it's still up around 34%. How much of this is fundamentals? How much of this is sentiment where people are just getting, bullish about the business? We're going to talk about Tesla's earnings in this video and my concerns on why you could potentially see Tesla back at around $100. That's how I'm thinking about this, valuation. I'm going to talk more about that later in this video. The concerns and also the fundamentals in this video of Tesla. What's going on? If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing. Let's dive right in to understand, well, what's going on here. So looking at the results, overall solid revenues around 24%, a little bit lower than a lot of folks would typically like to see, but still very strong growth. They're definitely taking market share. The automotive industry is not growing 20%, but look at automotive revenues, that's growing around 18%, and so you are seeing a nice uptick in their energy generation. The key point that you need to focus on as an investor, in my opinion, looking at this, is that their margins are taking a huge haircut. Gross margin got about a 10% cut. This was after a series of price cuts, in 2023. Now, management says, look, we have, orders well in excess of production, but it is sort of, a cautionary tale to say, okay, well, why are you doing these price cuts, repeatedly, unless it's to spur demand? And so that is the concern when you're looking at these margins. Gross margins dropped about 10%. They did pull their operating expenses significantly. And, you're looking at operating expenses that were effectively flat, down slightly, despite the fact that they were still growing their core business about 24%. And so their profitability dropped from around 19% to 11%, still generating some free cash flow, several $100 million. But this is down significantly from where it's been, let's say last year, where it was over $2 billion. This is going to be a key metric to follow, because I think if you start seeing, an environment where they're still growing, but then you actually start seeing cash burn. These are some yellow flags, I'd say, that investors are going to be cautious about. This could put, Tesla sort of in a danger zone if you start seeing them, okay, now they're in a position of cash burning or not growing significantly. So those are the things I'd argue you'd want to track and follow. So far, very solid, just not the direction you want to see with some of these things. Elon Musk had some commentary around their margins, talking about how they had reduced prices considerably, and that this was several different price cuts during the year so far in 2023. And, but it is worth calling out that Tesla's operating margins still are among the best in the auto industry, and that they've made a strategic view that it's better to aim for higher volumes and a larger fleet than, let's say, lower volumes and higher margins, to sort of keep the margins that they had been. For context, previously they were at like 20% margins, around that level, and now they're closer on an operating basis, closer to 10%. Now that has a big impact on how you're going to think about the valuation of business. What's the right margin level in, let's say, 5 to 10 years from now? We'll talk more about that in just a second as well. So he's making the point like, look, in the short term, we're investing to grow our fleet. Long term, it's better to ship a large number of cars at a lower margin, and subsequently, so maybe in the coming years, harvest that margin in the future as we perfect autonomy. So that's like cross-selling, upselling to their existing fleet of customers, saying, hey, wouldn't you like this car to drive itself? And then paying a very high margin, fee for effectively that software upgrade. And that would be very high margin for Tesla, potentially in the future. And that's a core bull thesis there. And look, it's just because the recent results were a little weaker than Wall Street expected, doesn't mean they're not developing super cool stuff. I mean, you have the Cybertruck expected to come out later this year. They're talking about the third quarter. Elon Musk says it will not be disappointed at all. It's amazing. He's very excited about it. Then again, when is he not excited about his products? He also talked about, Dojo, how it's a bit of a long shot, but the potential here for this supercomputer that helps train neural nets has the potential to become a sellable service that is similar to AWS for Amazon. Even though Amazon started as a bookstore, these were the words of Elon Musk, where he thinks Dojo, if they're successful, sort of offering the supercomputer as a service, could become several $100 billion revenue market. Now, Elon Musk is known for sometimes saying has a flair for hyperbole. So we'll see, if that if that gets there. But then again, he might have a flair for hyperbole, but he's still, doing awesome stuff, launching rockets, building really cool cars. So you got to mix both in, when you consider this. There's a little bit of a discount you need to consider for what he says, in my opinion, even though his execution is really very, very impressive. So where does Tesla go from here? That's a key question. Well, first of all, in full disclosure, this is not financial advice. And also, quick plug, I just started buying a stock that I think is over 300% upside that I called out to my subscribers at unrivaledinvesting.com. I also expect to raise prices soon, so now's the time to act if you'd like to lock in a favorable rate and take charge of your investment journey. That's at unrivaledinvesting.com. Going back to Tesla, thinking about where do they go from here. Look, they are going to continue to innovate and launch new products. You have Cybertruck, you have the Semi, you have the Roadster, and you have additional services. Robotaxi is going to be a key one that could get launched in the years ahead. So that is going to have a huge impact on their valuation and, where this business's fundamentals shake out, when and if they launch. I think they will ultimately succeed in doing it. It's just taken longer than, autonomy has taken longer than Elon Musk has repeatedly guided to, any year now. Now, looking at what they've done though, look, this is what I want to see from a company that I would own. Whereas I would want to see, and I don't own Tesla right now, but what I would want to see is that year after year, quarter after quarter, a company taking market share. And you're seeing that Tesla is doing that with their vehicles across the world in US, Europe, and China. As long as they keep doing that, my view is your value proposition is very strong. And that's the whole name of this channel, Unrivaled Investing, where I'm looking for companies that are exceptional, are unrivaled, that have the right to win, can constantly take market share. Now, it might be because of the brand of the product. It might be some sort of cost advantage. It might be some sort of technological advantage. I'd argue you have all these different components when you're looking at Tesla, and that's part of the reason why they keep taking market share. But looking at their most recent results, yes, very impressive to see they were growing their production. Elon Musk is a master of growing production, clearly has delivered. You're looking at total production for the S, X3, and the Y, up 44%, 440,000 cars produced in the most recent quarter. But the alarming fact is that every single quarter for the last 4 quarters, now production has exceeded deliveries. Now, you might argue, well, some of this is building a COVID, boost in terms of inventory because you want to make sure you don't have any supply constraints. I think maybe you can use that excuse for 1, 2 quarters, maybe even 3, but for 4 quarters to see that quarter after quarter after quarter, it does start becoming alarming. And you can see how inventory is absolutely exploded relative to where it was year over year. So it is a little bit concerning to see this. Now, once again, management, Elon Musk says, hey, we have way more orders than, delivery, or way more orders than production. And so I would want to see that inventory figure start working down without a subsequent huge hit in terms of margins, in terms of seeing them like, oh, they have to cut prices even more to sort of work through that inventory. That would be sort of a cautionary sign. But so far, I've called out some of the yellow flags. I don't have like a bright red flag where I'm like, oh my goodness. But I think the concern really is that a lot of these things are heading in the wrong direction. Some of which are doing great though. Like their storage deployed, up 360%. I really like what they're doing here. And look, let me make sure this is crystal clear. I really like, the mission, the transition of energy from, fossil fuels to sustainable energy. And I think what they're doing is critical. Rolling out storage solutions, megawatt hours, quickly ramping that up. That is critical for the world in terms of getting us to where we need to be long term. So I'm very glad to see them doing it. But, rooting for a company doesn't necessarily mean you have to own it for your own personal investment journey. And that's why I'm going to talk about their valuation as well right now. So thinking about their valuation, where the stock currently is, currently around $500-600 billion market cap. So it's one of the biggest companies in the world, rightfully earned, where the question is, well, where do they grow this next year? The first quarter revenue was around 24%. I'm going to assume around 20 to 25% growth this year. We'll see how that shakes out. I'm assuming margins, long-term margins, well in excess of their most recent quarter. I'm assuming 18 to, let's say, around 22.25%, 22.5%. So around 20% margins. Once again, Most recent quarter was closer to 11%. So this gives them, in my opinion, a lot of credit for future initiatives like autonomy, like getting to future scale, like the fact that maybe they dodge a bullet of a tough economy. That might not happen though, but this is saying long-term, where do their margins shake out? This one assumption has a huge impact on where the stock price goes in the years ahead. So this is part of the reason why, sort of growth investing can be very, very difficult, is you're making an assumption with a lot of inputs and it's not necessarily a high degree of certainty. I personally prefer looking for businesses where it's like, hey, you've already proven that you can deliver this margin, and my assumption is that the margin is going to be either there or it'll be in a range of there, around there, give or take a little, and that they'll just keep executing and keep growing. And that, those are the types of companies I'm calling out to my subscribers at unrivaledinvesting.com. And so looking at this, looking at their growth potential in the years ahead, I'm saying 15 to 25% annualized in the years ahead, a little bit of a slowdown from what I'm penciling out for this year. Thinking about the end multiple, maybe 15 to 25 times earnings. If you're anywhere between 15 and 20 times, then the stock over the next 5 years just stinks. And I think this is really the key aspect for investors to take away, which is that a lot of the data points from this most recent call and their earnings results it's not enough to get the stock back into a bull market territory. So you either see it very choppy, where it sort of stays range bound, or you start seeing people get nervous, either because of recession or because they start, they continually go into a position of saying, hey, we have to do additional price cuts, additional investments, and maybe you start cash burning. And then, in that type of scenario, maybe, Tesla goes back to $100 a share. And so I look at this and I'm thinking it would not surprise me to see this closer to $100 a share, just given that the risk reward environment, looking at this, I don't think it's super compelling at 166. I previously called out at 190. I didn't think it was compelling. Now at 166, I'm still not there using this framework. If you have a different opinion on the different, inputs that you're using, I'd love to hear it. But looking at this, and keep in mind, this is a hypothetical valuation framework. Stock price can go way higher, way lower, but it depends on the execution. It depends on, will they achieve these types of margins? It depends on the sentiment. Will a 20 times multiple, give or take, be appropriate for this? And I think it's appropriate in this investment environment to consider more caution, to say, hey, like when cash is yielding more than 4%, that I don't want to assume a crazy multiple 5 years from now. I want to assume something that's grounded it more in reality, and so I'm personally getting, 4% plus on cash at Interactive Brokers, link below, and I'm thinking, hey, that makes it extremely difficult for Tesla to be at, let's say, 30 times, 40 times earnings multiple 5 years from now. That's sort of, as Warren Buffett has repeatedly said, interest rates sort of like act as gravity on valuations. And that is a key point that I think investors need to wake up to, given that the past few years has been a wild ride, but we have, there's a real cost to holding, the alternative to cash, and where cash is paying you, you're paid to wait. And so this aspect is important to consider when you're thinking about the valuation, when you're thinking about the inputs here in terms of where Tesla stock goes. I personally, I'm very excited about Elon Musk's mission here. I'm rooting for SpaceX as well. That said, I'm an investor in neither Tesla or SpaceX. Maybe I'll be an investor at some point in Tesla, at least now as a public vehicle, but it would need to be at a much more compelling valuation setup for me personally on my own personal investment journey. If this video has been helpful for you, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for tuning in.